Alright then guys, welcome back to the channel. So I'm not gonna lie, I tried to film this video like 3 times already. The first time, I have a new mic, I didn't have it plugged in properly. The second time, I realised at the end, after the whole thing, my camera was covering the screen like this. So third time lucky, let's get into this. It's gonna be a breakdown. If I move the camera out of the way this time, we can break down the GJ trade. Now this is obviously not the trade, this is EURUSD. It's currently playing out, we've hit TP1, so 1.5% already. Just thought I'd show this as it's playing out nicely already. I was actually away making food, so I missed this second position right here. However, pretty much everyone in the Discord already took this as well. So nice to see everyone on the strategy, able to trade it themselves thanks to all the value in there. And yeah, this position, to be honest, I probably only would have risked half on it just because I'm already in with half on this other position, but playing out nicely, good reaction so far. So we're going to see if this can continue to the 1 to 7. 1 to 6 at the moment, but potentially a 1 to 7, even a 1 to 10 depending on how it moves. If you look to the left, we've got clear space right here, so easy places to target. But that's not what we're looking at today. Today we're looking at this GJ trade. So if I find my live market charts, here we can see the trades that I've taken live. So the last trade on GJ, this was a loss, minus 0.4% for me, about minus 0.5 by the time I sent it to the Discord. So this was closed based off some pretty advanced, to be honest, features that I won't go through in this video due to the DXY and the JPY basket. I was monitoring those, as well as monitoring UJ, how it closed in its demand zone at the same time, and it wasn't going bullish. At the same time as that, all GBP pairs on this initial reaction had a very strong push to the upside. So the pound was clearly doing very well, whereas everything else was actually shaping up for GJ not to go bullish. Apart from that, this is the trade I'm going to be breaking down, so it's a simple 1 to 3, and there's actually a lot of things you can learn from this trade that were used very well. The first one being the TP placement. So as you guys will know, I actually place TP at the high all the time. That's how we trade the strategy. It's a minimum 1 to 3 risk to reward, so this was obviously within the rules, but the first TP is normally always at the high. And you'll see right here, I actually didn't take that. This supply being one of the reasons, but the supply by itself is not enough for me to change TP. This was more so based on the structure, which I'm going to break down to the left, and some other factors, so we'll get into those. But for now, this is the trade. So very simple. We trade liquidity, supply and demand, for those of you who don't know. Basically, normal supply and demand, but you can actually be profitable with a proper edge. So if you look at this, we need liquidity in front of the zone so that we don't get used as liquidity, and then untapped zone doesn't close in the zone, and we normally enter on the first candle's close in our direction. In situations like this, where there's loads of momentum, and you can see that it's going to take off without you, or the close entry will be very bad, we do have some more aggressive entry models, so I'll get into those as well. Now then, starting on the structure, so why was the trade valid? Well, first of all, we have to be in trend, otherwise we tend not to take the trades. So right here you can see, just for the immediate trend, very clearly we were making high highs and not breaking lows. That was simple enough, nothing there to be debated. Now, one factor that could have made people avoid this trade was actually these highs up here, aka this gap fill / supply zone. So if you take a look at this, each time we actually reached the next area of importance, we dropped straight to the downside. So this is very interesting. This first one was the normal supply zone. We hit that, went bearish. The second one, we filled this gap perfectly. We hit that and we went bearish. The next target for us after this is going to be these highs. So with that in mind, we had more space to keep going towards these highs and potential to actually take a demand trade. Secondly, what's very important to note about this type of structure, what I just mentioned, each time we make a high, there's a big retracement, a big sell-off to the downside. So clearly there's still some sellers in this market that are still coming in. The buyers aren't completely in control, and it's moving in these sort of erratic and large swings. So if you look at this news candle, very big. So we dropped over 400 pips in this move. Of course, it's not going to be normal market structure to just go in a straight line, up 400 pips and just take out this high, right? That's not normal. You can't expect that to happen. So it is going to have these sort of waves and retracements. If you look to the left, the last time we moved this gap of 400 pips, it took just over 3 days. Multiple swings. This is of course normal market structure. Multiple swings though. It's not just going up in one move. So we're not going to expect the same thing over here. And so us not taking out this high and still having these pretty large sell-offs did not turn me off the trade at all. so I still took it, of course, or we wouldn't be making this video. If you look at this is another thing. The trend line for us being bullish is a lot steeper. If you want to make this a trend line, it's nowhere near as steep, and we're hardly reacting off these highs. We have nice space to fill. But with that in mind, you guys might be thinking, well then why didn't I take this TP above the highs? If we're taking out this each time, surely you could have expected it to just happen again. Well, when we're moving erratically like this, based off all the past backtesting I've done, so all the way since 2005 is when I first started on the main pairs. On the newer ones, I've definitely not done that much just because I don't really need to anymore. But when I was learning the markets, that's what I used to do. And this is not really something that I can just explain by words. It's like an intuition sort of. Only way you'll gain this intuition is by doing large and extended backtested periods. And I don't just mean like you're playing some random music, not focused. You know, you do 2 months and then just turn off the charts. What I mean is being fully focused, going through large chunks of data, let's say a year straight on the 30-minute time frame, actually checking the structure and how it's consistently moving. And what this does is it gives you like a subconscious understanding of the markets, and this is what I call learning the markets language. There's no other way of really knowing this. You can't put it into words so much. You just simply have to put in the time yourself. Same way if people are learning a language, when toddlers are learning to speak, they're simply just in that environment, hearing the language constantly for a large amount of time. So it's the same way to learn the markets language, and that's all I can say for this. With this supply being here and how we were moving in this type of way erratically, slowly starting to become less above the highs, this one just a little bit above this high before dropping. I just expected this one to not take out the high. That's all I can say on that. You don't want to be trading too much based on expectation. So what you'll notice is that nothing to do with our trade was based on expectation. The zone was valid, the direction was valid. So you never trade just based on what you think. TPs, on the other hand, it's okay to place a TP. Only missing out on 0.5% doesn't make much difference, just to not have it forcibly go through the supply zone when we're not moving cleanly. So that's why I did this TP. And of course, if you were just randomly basing TP on things you thought all the time, that's not going to be sustainable. So as long as it fit the rules of a minimum 1 to 3, it's okay where you place it. We normally have bigger TPs than a 1 to 3, all the way up to 1 to 10s. That's when we have clear movement. Here there wasn't really any clear movement or clear space. Now, even if we did actually put it higher up at the first high, it would have ended up hitting anyway here, right? But the thing is with this is we more than likely would have been at break even, coming off supply. Whenever it comes close to TP and retraces, we don't just sit around and wait for it to take us out. So we normally always go to break even in this situation, and that's just due to psychology. So you want to trade in a way that's easy for psychology. We're all humans. But no one, no matter how long you've been trading, will not be slightly annoyed if you go a couple bits from TP and then reverse. You have to accept the fact we're humans, trade in a way that aligns with it. So apart from that, if you think about it technically, coming up close to TP, if our TP is at the high and failing to hit it, shows that we're rejecting the high in a sense, and we'll just be sitting around waiting for trend to potentially change when it comes downwards and just take us out. So it's not worth it. So with all those factors weighing up, this trade very simply was 1 to 3. So hit within a couple hours, let's see. So yeah, about 20 hours here. So that was okay for 1 to 3, relatively long compared to most, but that was fine. Now over here, this was a loss I took, like I explained earlier, closed this 0.4% due to basically DXY, UJ, GBP pairs. There was multiple reasons for this one, but in the end, it did push up quite high before then retracing, so it would have been a loss anyways. And yeah, a couple pips down here would have lost by in the first place, but that was that trade. So let's take a look at you. What a nice reaction, man. Still kind of a little bit gutted I missed out on this. At the moment, we have this demand to pass still, so there's a chance this does come back. This is a liquidity demand. Technically, it's very counter trend though, and of course you want to be closing on it, but there's a chance it does come back up from this demand. So we'll see if we get past these lows. To be honest, clean sailing. These lows, TB2 that I still have running, currently looks okay. So all I want to see is one thing before I'll be almost 100% confident this hits. And this is what we wanted to see in the first place. which is why my TP1 was only at 1 to 3 here instead of further down. This low, we had to break consistently and on the 4 hour close below. So you can see we did break the low and we failed to close below. So that is why, I go back to 30 minute, my initial TP was just out the 1 to 3 because we didn't want to force it to break the low and potentially not make any profit. Again, you always want to make things easy on psychology. So that's why we had it placed here. To be honest, this already looked pretty good to now come below that area. If you look at the 4 hour now, big rejection to the upside on that bullish candle. Filled this gap pretty much. And this one's coming down nicely. So looking good, to be honest. We'll see what happens. For my TP2, more or less 100% chance we'll be at break even now, especially now that we've already tapped this second zone and started reacting bearish. This in and of itself was a pretty nice trade. Nice liquidity, nice zone. So yeah, definitely a valid position. And like I said, most people in the Discord already end up taking that. So we'll see what happens and if we can pass this demand zone. For now, I'll do a quick breakdown on why I took this trade. So very clear direction. Again, no need for me to get into this. Completely crashing downwards. So we're very bearish. And if we go to the actual zone, very nice liquidity. Of course, for liquidity to be valid, it has to take out its own low. So its low was here. This was a low point it made before making the liquidity. Then it took out its own low right here. And that's when the trade became valid. Now, one thing to note, this was an accuracy zone, so it wouldn't have been an untapped zone if we didn't draw it correctly. The normal zone drawing for normal supply and demand is like this. This is not accurate at all. If you look at this, supply and demand, the basics of it are that sellers come from one point aggressively, when the markets retrace, the sellers come back into the market, whether that's large banks filling the rest of their orders or just people selling from the same place. So the selling for this normal supply, what it was before, now liquidity supply for us, it started from up here, right? No one was selling from down here on this blue candle. People sold from up here and it moved downwards. If the selling started from up here, we don't want to be trading from this area. So if you look at this normal supply and demand zone, these always often tend to get fake outs when there's no liquidity, that type of thing. If you look right here, it tapped the zone, pushed downwards, and within about one candle just reversed straight up. So pretty much just a huge fake out, doesn't really use it at all. And then once it comes to the accuracy zone, the correct one, very nice reaction, and we've pushed downwards. So if you look at this, 5.7, so about 6 pips. Now, for a bank or an institution, 6 pips could be the difference of millions of dollars, let's say, especially for multiple banks, multiple institutions, multiple large players. So they're not going to want to sell again from down here, right? We're looking for the best prices using the accuracy zone. Now, when do we actually use one of these? Basically, if any part of this bullish candle that you draw supply zones off has come lower than the bearish candle after it, which started the demand move, only use its body and then to the top of the zone like standard, but we only use the bottom of its body, instead its bottom wick. So that is accuracy zones, and without it, this trade wouldn't have existed. So it's important to know about accuracy zones and to trade them properly. For entries, we always enter on the first candle to close in our direction. So in this case, bearish candle. If we look right here, I entered basically on the 29th minute, 28th minute perhaps. I'll send out when I put up the signal. And yeah, we could see it was obviously going to close bearish. And it just happened to push down afterwards in the last minute. So we got a little bit of a better entry, but not an aggressive entry or anything like that. Standard TP on this trade was very important. There were some people who didn't use the proper 1 pip stop loss, and so they ended up being stopped out over here when it came back up. If you look at this as well, this candle actually closed in our zone. Now, this is why it's very important that you do your own detailed backtesting on each pairs, because then you will learn the pair characteristics. On any other position, when this closed in the zone, I would have been looking for a chance to get out of break even when it retraced back, and this trade definitely gave that. With EU, I know from backtesting it enough, it's pair characteristics. I've seen it close in the zone after a valid entry more times than any other position and still end up winning. Any other pair, sorry. So because of that, I decided to just hold this one, and that ended up making it a winner. So it's important that you know the pair characteristics. Not all pairs are the same, they all move different. Again, you can only understand this by doing detailed backtesting, putting in the time, or of course just hearing me say it like you just have. So As a little cheat code, you can just let me tell you the pair characteristics. But for now, if you want to learn your own, if you trade any of your own pairs, be sure to carry out those steps. So I think I already said in the start of this video, but the TPs currently is the 1 to 6, depending on how it moves. We obviously have this very nice clear space. This was just the first sort of 4-hour level that I could find. So this is the most non-aggressive TP. If we look at how it's come down from up here, it stopped at this level before and then retraced upwards. As well as that, it's just an obvious resistance level. The one underneath though is more major. So if we're moving nice and clearly, definitely will look to extend at least to this one. And then potentially, obviously to the left, we just have this big clear space to drop through. So potentially a max 1 to 10, which will put this position at about 6.5% total. And yeah, we'll have to see. Currently playing out nicely. In terms of aggressive entries, so this one on GJ was relatively aggressive. It was 15-minute break of candle, so we could see that I was going to close bullish already. Now, aggressive entries such as flip entries, I now don't take on any pairs apart from the big three. So the big three for me, GJ, UK 100 and Germany 30. These are the best pairs. They tend to often just take off from the zone very, very quickly. 1 or 2 candles into the zone and then it's gone. So on these, we have to be careful it doesn't run off without us. And that is when we take entries like this. We never really enter on the first 15-minute candle of the 30-minute. That's too aggressive. And while your 30-minute candle is forming, the next 15-minute could open, could just come down, close bullish, and you just had no entry. So you basically just took an invalid trade. This happened to us a few times recently, which is why we implemented this rule, because again, we want to be good on psychology. The extra profit you can gain from it is not worth it in the long run. So only on the big three, this one, so the first 15-minute candle, we had very nice rejection to the upside right here. And then on the second one, we were looking for that flip, which we saw right here. So this was the first candle to tap our zone. 15-minute went bullish. The next one, we took the 15-minute break of candle. Very simple. We saw a huge rejection, and that's why we took it. On this trade, you can see that if we waited too long and we waited for the close, we would have got a terrible entry, terrible risk reward, and it wouldn't have been a trade we could even take. So that's why it's important to be switched on in these situations. London Open had just happened, so I was aware that there was a lot of momentum in the markets. Now, you'll notice that this actually went underneath the zone by about 0.1 pips. For me, that's okay, right? 0.1 pips. We're not going to be too awkward about it. Potentially on a pair that's not in the big three, I would have considered not taking it because of that. But it was London Open. I knew there'll be loads of momentum, so it can happen. It's such a small amount, and you just have to think. Institutions and banks are not drawing these boxes on, going onto the chart and going, oh, it went 0.1 pips under, all right, we're not getting in anymore. That's just not a thing. That's obviously not how they trade. So, you know, we have to be serious, not just avoid a whole position because of something so stupid like that. And yeah, we still took the trade and it ended up paying off. So that's a full breakdown of the GJ position and more or less the structure. A little bit of a bonus with this EU one that's currently playing out. Man, what a rejection off this second zone. That is, even for me at this stage, that's pretty painful to see. I did send this out in the daily forecast this morning. Said this is 100% valid and we'll look to take it if it does come to the zone. So there it is. Sometimes I miss the positions as well. You know, it's very rare that it happens. But here we have everyone in the Discord taking the position and I've missed out on it. Is what it is. With that being said, if you want to join the Discord, link in the description. That'll be all for today. Quick trade breakdown. And yeah, hopefully you guys learned a lot from that video. See you guys in the next one.